Welcome, everybody, to the New York City Real Estate Expo edition of Crossing the Line with Greg Heym. In case you didn't notice all these people behind me, we're here at the Marriott Marquis for this great expo, doing a show live, trying to hear each other in the crowd. And we celebrate the return of Shar Sedgh. We don't know really where he was the last month or so. We put an APB out on him. We found him. Apparently, he was getting his head very carefully shaved. Looks good, buddy. How are those lights treating you?
Amazing. As long as the glare's not bothering you as much as it's bothering me.
Well,
I think
hopefully
we'll
it'll
be
hit off my forehead and bounce off yours, because that don't look good. And since we needed some hair on the show without Nadler, here we got Jared Antin.
Filling the quota.
Jared, well done.
Guy who seems to be everywhere all the time at once. He's young. That's how he does it.
Energizer bunny.
Meanwhile, I'm getting injections in my knee just to get to work in the day. So we're celebrating a Jets win, because we always besmirch the Jets, although every other team, New York team, had to lose that day.
Well, when you're an 0 for halfway through the season, I don't know if you're celebrating wins. You're more upset that you're winning.
Yeah, well, if there was a clear-cut #1 draft pick, I'd be more upset.
True.
We lost Trevor Lawrence because we won a meaningless game against the Rams. Let's hope that doesn't happen this year. But the Jets will pick the wrong person. We all know. Whichever one they pick the wrong.
The win is for the kids, though. The kids feel good.
I don't know. I would have rooted for a fully defeated season, because that's pretty rare too. So
Nobody's ever gone 0-17.
exactly.
Yeah,
there's something worth about that.
If we can't win championships, we might as well be the biggest losers.
Exactly.
Super Bowl or the toilet bowl, one or the other.
Speaking of losers,
Where's this
we
going?
have a government shutdown going on.
Oh, okay.
But we actually got data this week because they needed it. Social Security needed cost of living adjustment stuff. So we got consumer price index data, which came in a little lower than expected. People go, Greg, it was 3%. Isn't it supposed to be 2%? Yeah, but that doesn't matter. As long as it's at or below expectations, we're good, right, Jared? Did you see that? And you go,
yeah.
Yes.
And I think 2%'s a fallacy anyway. That's
It's a
yeah.
number. Plus it's a dynamic target, right?
Right.
It's the old horseshoe thing. Just get it close enough and
Correct.
It's good. But, what continues to drive inflation is housing. And this past month, the headline number, it was gas prices shot up. So you look at that and go, we don't care about gas prices because we look at core.
Well, because we got electric cars, but
I got one. Who else is driving a Tesla?
I got an electric car,
Okay.
but gas prices are also still a little bit lower than they've been. So comparatively, they're still, lower than some of the high levels of previous.
Right. And, Shar, everybody talking about tariffs. Apparel prices did increase 0.7% last month. But here's a kicker. They're lower than a year ago. So how does that make sense? That tariffs are raising the price of everything when the price is lower than a year ago.
Who says things are supposed to make sense? I think that's where you went wrong.
Spoken by a true lawyer.
There you go. So the question really is the data that we have now with the government shutdown going to be more accurate than the no data that we had when they weren't reporting anything?
Well, no news is good news.
No news is good news, exactly. But even when we had the data, it was always wrong anyway. So maybe we'll
I
be a
didn't know
little
that
more
anybody ever said that
efficient
about
this way.
CPI. Clearly the employment
Right.
reports, needed some work.
Right.
But they don't do the revisions of CPI to the levels we see with job numbers.
Right.
That's why we all wait for PCE. That's the cooler older cousin, as I described it, the PI brothers,
Right.
Because prices can go up, but if nobody's buying those items, it really doesn't matter. And what PCE takes into account is actual spending.
Yeah.
But here's the problem, Jared, right? The Fed is meeting this week. They have to make a very important decision. And they have almost no data to make that decision.
Right.
And to make it even worse, ADP was giving them data. And then one of the governors said something he shouldn't have said. And now ADP's not giving them the data anymore. So now they have even less than nothing, essentially. So how does that work? What do you think they're going to discuss this week other than maybe the NFL games?
Yeah, I think they're going to sit back, put their feet up on the table, and they're flying blind. But I think, in their dual mandate, they've been erring more to needing to make sure that they're promoting employment. And the numbers that have been coming in before have certainly been concerning. So I don't see a world in which they don't cut rates at least a quarter of a point. If they don't, I think the market's going to react in a negative way. I think if they do, the market's going to continue humming along. But to me, I think it's almost a sure thing that the Fed makes a cut. And that's already largely priced in because we saw mortgage rates trend down the last 2.5 weeks.
If they don't cut, it would be disastrous.
Right.
I mean, let's face it, because they basically telegraphed it. Their dot plot showed that.
Yeah.
We're expecting another cut in December and one probably early next year. But yeah, the whole idea of the dual mandate bothers me. And I've been very rough on the Fed, and they deserve every minute of it. It's two mandates that work exactly against each other, right? If you think about Volcker in the early 80s causing a recession just to get inflation down, you know, it could be pretty brutal at times. But so we have a lot of people expecting to see more drops in mortgage rates. Now you're working with buyers. I mean, what are you hearing from them? I mean, you're getting busier, I assume, now because existing home sales, we could talk about the real estate market in a minute, have been up. So you see more people saying, okay, the rates are the lowest level in a year. I should learn from the mistake of last year when in September rates were just about going to get below 6%. Everybody wanted to wait. And then a couple months later, they were over 7%.
Absolutely. So I would say that initially there was a little bit of confusion on my clients, right? Because we had the lead up to the September meeting. Everybody's saying the Fed is going to drop the rates. They were talking about a quarter point, maybe half a point. And not enough people study economy like you or listen to your
watch
podcast.
This podcast. I mean,
exactly.
They don't know what's going on.
How can you know?
We need Matt to promote a little bit more, to educate those people. Everybody's thought, you know, the feeling was we're going in a good place as far as real mortgage rates. But what actually happened?
And then what happened right after the Fed cut?
The same thing that I kept saying on the podcast.
Oh, you said it, sure.
Well, I was repeating what you were saying. That's what I meant. That rates actually ticked up like they did last year. So I think initially there was a little bit of confusion, but I thought it was good because it was a wake-up call for people to say, okay, rates are as low as they've been in a year. Let's move on it. And then I think in the last couple of weeks, like you said, they dropped down a little bit more. And all of a sudden we've seen an influx of refis. I made a joke to my partner the other day. We've seen more refis in the last month or so than we did in the last.
Well, did you see the latest
months.
data from the Mortgage Bankers Association? Year over year, last week up 81%.
Yep.
Yeah, so my joke was I have to read Refinances for Dummies before the closing. He didn't think it was so funny. I giggled inside.
At least we know who the dummy is.
Well, if it wasn't obvious
your
on
words,
the looks of the operation, if it wasn't obvious.
I don't know. Todd's a pretty good-looking guy. You know.
Self-proclaimed.
So we've definitely seen an influx of refis. We've got a bunch of them closed already. And again, those are people either coming off of adjustable rates who had to refi, people who bought at the height of the market was above 7%, built a little bit of equity. And those higher loan amounts, you see a small drop in rates, and it's worth it for you to do it as long as you're going to stay in the place enough to cover the costs.
Right.
And the costs on a co-op are not so high, so it's really worth it to keep in touch with your mortgage person and refi.
Yes, call Scott Nadler up. I think he's on a boat in Miami right
There
now,
you go.
or something like that. So you're on the brokerage side of things. You're working with our great agents every day. Can we explain? Is it hard for them to try to explain the fact that the Fed's moves have no direct correlation and can have the opposite effect, as we just saw, and that mortgage rates are really determined by people that buy 10-year treasuries? Yeah. Can people grasp all that?
The smart ones can. No, the ones that have an econ background can. But I think it's more of a.
And shouldn't everybody have that?
Everyone should, right? Coming from a finance econ guy. So, to me, I think more than the actual rate today, what's important is the buyer psychology. If people think the rates are coming down, they feel better, they feel more optimistic, and they feel more motivated to be able to purchase. So even though, yes, 2 years in a row, rates hit the low in August, or the day before the Fed then made their cut in September, buyers don't understand that. But again, it's true in human nature. Do when everyone else is not doing, right? Go against the tide. But human nature, everyone feels more comfortable to do what everyone else is. So, okay, how early then can we jump in on that bandwagon tide? Because what's going to happen is with more rate cuts and more declines in rates, or with changing buyer psychology, getting past the election next month, it's going to create more demand, and prices are not going to come down just because rates dropped, right? It was a fallacy that prices didn't come down when rates rose, because what no one factored in is we went into a supply constrained environment instead of a demand-driven environment. So rates are moving downwards, and the buyer psychology is really the most important thing, that buyers feel good.
I think, too, that, if you wait, that doesn't mean everybody else is going to wait, because a lot of people need to buy, right? And that makes the difference.
Correct.
Scott Nadler always says, look at the payment, look at the payment. And Inventory, I think nationally is up about 15% from a year ago.
Yeah.
And that's good, but as rates go lower, that inventory can get absorbed like that.
Correct.
And then prices are going to go up and you miss the boat. And I always point out the one thing you can't change about your purchase is the price.
Correct.
You can eventually change the rate, right? You steal everything I say, Shar.
But you're right. I had a broker tell me, you're always trying to create buzz. When you have a listing, you're trying to create a little bit of buzz, get people to think that there's something unique and interested. And artificially, this happened because of the because of the speculation of the rates were going to drop. And all of a sudden, I had a client, a broker who had 9, 10 people come to an open house. And all of a sudden, people seeing other people coming in, it just created an aura of we have to move. And it all was based on speculation. They didn't know whether rates were going to drop, but they said, listen, if rates drop, we're in a good position. If rates drop, prices are going to go up. And all of a sudden, it created a little bit of movement and activity where all of a sudden your phone is ringing, my phone is ringing. Yeah. Scott's probably on Do Not Disturb because he's on the beach, but when he checks his messages for sure. And I'm sure you have brokers calling you asking, hey.
No, they just come into my office after the talk.
Saying, can you make sense of this? And you sort of have to tell them the reality of it. But at the same time, nobody actually lives off that 100%, right? The feel of the market doesn't need to be data driven.
So, and that's the buyer perspective. Let's talk about sellers for a minute, right? Paul Wilkie always likes to say there's never a market for overpriced property. And this is true.
Yeah.
I had an agent come into my office yesterday and needed some talking points about how to deal with the seller. And it's like, if you're not getting traffic, the answer is always you're overpriced.
Correct.
That's the easiest answer in the world. Why are you overpriced? Oh, that apartment needs a lot of renovation.
Right.
So now, are you finding that more, that you have more brokers coming to you and that they have to really tell their sellers, look, there's more stuff that's come on. Inventory's kind of neutral. It's not too high. It's not too low. People say nobody wants what's out there. There's always a shortage of prime stuff, but we're seeing those unrenovated co-ops start to sell now because of reductions. But if you don't get on board, I always like to say, and Shar will pretend he came up with this, you want to be the first person to cut, not the last person.
You got to get ahead of it. Yeah, I mean, look, I just posted something today on my LinkedIn talking about...
This guy posts so much.
You got to be out there, right? You got to be everywhere.
But I only do what I'm legally required to do. That's it.
Sorry, just to jump in, by the way, they always say the top business card on the stack is the one that gets the business. Yeah. And these days, people don't keep business cards on their desk.
Top of mind.
They look at social media. So if you post something in the morning, they're bringing an offer. They're thinking about it. Sorry, go ahead.
Yeah, we all know Jared Antin is. Don't worry about it.
But I like to say the best marketing in the world won't fix an overpriced home, because marketing starts losing some of its value once you're priced out of your league. And as you said, it's all about being priced right, renovated to perfection, and have the right sort of proportion within the home. And we're seeing that homes that are priced right are moving because buyers are fearful of overpaying, and there's no external motivation to transact today. So we're seeing that things that are renovated to a T, look really good, are trading really, really well, and sellers have a little bit of pricing power. But otherwise, you have to have that hard conversation and manage sellers' expectations. People don't want to take a loss, but sometimes they're going to have to. So this means, how do we position? And you're right, price cuts are going to happen, and you want to get ahead of it, because what happens is the fall market is this tight, confined market. It starts right after Labor Day, and it goes until right before Thanksgiving. And the best homes are going to sell the quickest, and then it's process of elimination. And if you don't cut to make that second or third circle for the buyers, then you're completely out of the running for the season.
Yeah, and then you're waiting for the spring, and more stuff's going to come online, and you're going to have to deal with that.
And then you're living in a whole other world. When you get to spring, who knows what's going to happen between now and then. And you're still stuck treading water.
There is one major thing that's going to happen here.
The E word?
You're so happy.
The political contest. That is the correct terminology. Now, we've been hearing about hesitation but the last couple of weeks, the contract sign data has not shown that. It's been a really busy market.
Correct. And yeah, we've seen, an incredibly busy summer for luxury contracts. 4 million and up had an exceptionally busy summer. It was a little bit slower in September, but it took a little bit of a breather. But I think the important piece too is when you look at the contracts or the new inventory that came on in September, there was a substantially larger increase year over year in homes under 4 million than over 4 million. So it means that in times of chaos or confusion, the wealthy don't flee the city. Buyers don't stop buying. And we've seen this time and time again over the last 25 or 30 years of the city history. The wealthy people are here to stay. Those that were going to flee already did, whether it was 16 and 17 with the SALT or COVID or things like that. And we're seeing some people start to come back even from Florida who may not be aligned with the political climate in Florida. So now we have really total polar opposite climates here.
Well, I think too, you're going to need more of that under 4 million inventory as rates come down, because that's going to matter a lot.
Yeah, so those people are very rate sensitive,
Yes.
and you're right. And those might be the people who don't have the means to leave, even if they wanted to.
Correct.
But I don't like that. I don't like that idea of the political climate impacting people buying or selling. Like, we're resilient.
Correct.
There might be like an immediate reaction of people saying, "Oh, what's going to happen?" But once the turnover happens, there's a new reality. You learn to deal with it, and in 4 years or whatever, 6 years, we cycle.
They forget the idea that real estate's a long-term investment.
Right.
Exactly.
You shouldn't buy or sell or not buy or sell because you're a little worried about what the outcome of something is going to be. Just like if you buy a stock, you're supposed to be a long-term holder of that
Absolutely.
stock.
Right.
And doing stuff, people do talk a lot about, I'm going to do this, and then they wait, and then they go ahead and do exactly what they were going to do before. And I've been saying for a couple of weeks, now is a good time to be pushing a seller price, because you have that uncertainty. There are people who probably are waiting. There's a lot of concern about the economy. We don't know how strong or weak it is right now. There's concerns about stocks being overvalued, even though the highest percentage of companies beat third quarter estimates than in over 4 years in quarterly returns. So there's a lot of things to worry about. But when, Jared, now you're a bit younger than me, when have we ever had certainty?
You never have certainty. There's always something else. So yeah, this is a great time to be able to diversify, take some of those gains out of the equity markets, put it into real estate. And I'm even guiding agents and buyers right now, like, put in that bid before the election, because we saw this, after last year's presidential election. Like the result, don't like the result, it doesn't matter. The market unlocked, and we had an incredible winter season last year. So we can have the same thing here, where higher end properties are moving. And I've heard more and more agents say, my property is all of a sudden woken up. I haven't done anything. I didn't even do a price drop, but now I'm getting interest. And again, you're seeing that process of elimination where buyers are sort of moving down the totem pole in terms of priorities.
Right, and what you can do really is what we talked about before, about speculation and the psychology of clients, is that you can use this uncertainty and sort of find an angle for your client, whether they're selling and buying, and use it to your
sellers shouldn't
advantage.
feel panicked. I mean, there is still, a lot to be optimistic about.
Correct.
Stocks are having a great year. It could be the third straight 20% increase in the S&P 500. There's a lot of concern about AI. Did we get a little too happy about it? Certainly here in New York, that's very important, not just because of the wealth people make, but the people that work in that industry who are looking at the potential of getting over $50 billion in bonuses. Think about that, $50 billion in bonuses. That's enough money to buy all the available apartments in New York City and townhouses several times over. And that's all cash. Are we getting excited about that?
We should. There's a lot of money to go into real estate, high-end cars, whatever else you want.
Maybe we should start selling high-end cars.
The Ferrari dealer
The Shar mobile. I like it.
I'll take it.
Convertible is the wind in your
Yeah.
I want a plane.
I missed you.
I missed you too.
There's a hair imbalance.
Nobody's called me
podcast.
Sarge in like a month.
I gave you a nickname. It's yours now.
I'll take it.
What
was it?
You can't say Shar Sedgh fast. It's impossible. It comes out Sarge.
You say it 3 times fast, rates go down, by the way. Nobody's been able to do it, though.
Click those heels.
Wow,
Do you have a big move coming up? I'm Scott Nadler with CrossCountry Mortgage, and I've got the loan to match your dream home. Whether it's your first or your fifth, I'll make the process quick and easy. Call me today. Let's make it happen.
Sedgh & Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
And of course with the Fed, getting back to that, it's going to be more important what their statement looks like than what we all know what's going to be in the beginning of it.
Right.
And I always joke, it's the Mad Libs thing. the economic growth has, pick a word, moderated. It'd be interesting if they complained about not having economic data. That would be kind of...
The data is inexistent.
Yeah.
Right. Based on the data we have not been provided.
Well, I mean, if you look at what was happening before, there was a benchmark revisions that's attracted over 900,000 jobs that we thought we had through March. Then we had June go from over 100,000 jobs added to negative job growth. Who knows what would have happened to the July and August and September data if we actually had it, and who knows what that stuff's going to look like. So that's an uncertainty level we haven't had, because that's the one thing that's been keeping us out of the recession. People talk about, well, we had the soft landing. I go, no, we haven't. When did that happen? Inflation's not at target. Now, do you think about these things, or only economists thinks about these things?
I think about them in the construct of how it impacts buyers and sellers doing their thing. So it forms the basis, right? Because everyone needs to feel comfortable and secure to be able to make that decision, which I think is the key reason that the $10 million and up market here locally has been doing so well. Because if you're wealthy, and it doesn't really matter what's going on in the world around you. The rest of the market that's a little bit more grounded is super tied to their employment prospects, how comfortable they feel, what their bonus is going to look like. Are they going to get a raise, a promotion, and things like that? So in order to make that big purchase, you need to feel super comfortable. And the more uncertainty, the more things that are going on, the more excuses you have to not pull the trigger, because we all know doing nothing is a lot easier than doing something.
I know, that's what I say about my diet plan. It's just easier, always easier to do nothing. Well, and we have another thing we mentioned briefly was the SALT cap. Now that's been raised to 40,000. A lot of people go, that big deal, but
only up to an income threshold, though.
Right, and I think that could help those lower end buyers who are also going to be helped by lower mortgage rates to maybe make a difference, Shar.
Right. So I think at the end of the year, it will make a difference. First of all, I don't want to give the people who raised the SALT cap any credit, because they're the same people who lowered it 8 years ago or so. So thank you for
giving back some of it.
Taking it away and giving back some of it. But again, I don't think I have people on my initial calls when they're buying a property calculating SALT deductions on whether they can afford a house or not. They're really looking at, how much money do I have? What am I qualified for financing? What are my payments, my taxes? Very rarely do I even hear about capital gains. And, what we talked about going into this new political climate is, with the closing costs that we have in New York, in the 4, 5, 6 years that are coming up, if you're looking to buy and sell at a profit, it's probably not going to happen unless something drastic happens. So again, these SALT caps, they're sort of like, a little flavor at the end of the year. It's not going to bring anybody into the market that wasn't already there.
Do you get people that are worried about, there's been a lot of talk, and this goes back to even before the pandemic, about reforming the property tax system, because there are inequities in there. My good buddy Martha Stark has been working with Tax Equity New York for years on this. Do people mention that? I know a lot of people want to know what, especially when they buy, they think automatically the market value of their property is going to go up. And if they're buying an apartment, that couldn't be further from the truth, because they use rental comps to do that. I got to have Martha back on the show to talk about property. It's been a while. But do you get a lot of questions about that? Or do the brokers get all that questions? Because then they ask me, and I have to pull the tax bill and show them.
So I don't get much of that. And if anybody did, I would say I think a lot of that's just political posture and speculation.
Well, there's things that can be done without help from Albany, and most things cannot be done without help.
But that's the one most direct thing, that he could restructure how properties are assessed. But it is interesting because the city assesses them different than the suburbs. Usually on sale, the properties in the suburb, if it got sold for a higher price than before, it's going up, right?
Well, the difference is the suburbs has single family homes.
Correct.
Which you're allowed to use sales comps to value. In New York State, you can't use them for co-ops and condos. So that's the trick there. And the one change that could be made would be basically changing the assessment ratio. That's the only thing. Anything else would have to go through a long state process, and it gets a lot more clouded. More people get involved.
Right.
But all right,
they need that tax revenue. So any change that's going to lower taxes is
it's always going to be revenue neutral. I think the goal is to shift the burden to reflect more what the properties are actually worth, which makes a lot of sense. But how you go about that is when the infighting starts.
But one of the ways that they avoid that is that they charge you for services, right? So your taxes may stay the same, but all of a sudden your mortgage tax can go up. The mansion tax,
we saw the mansion tax go up.
Recording fees. I mean, you record a mortgage in Nassau County, it's $815. In the city, it's $127. So those are other ways that they raise money without the politicians looking bad and saying, I raised or shifted the burden of
Well,
taxes.
New York City's lucky, though, because property tax, which is pretty reliable and is mostly burdened by commercial properties, office buildings in Manhattan in particular, it's a steady, dependable revenue stream, which has kept us sort of out of the fiscal abyss.
Correct.
Which is good. The city actually gets complimented on its finances. And who knew that?
Yeah.
All right, we got about a minute or two left here. Closing comments, anybody? Shar, you want to go first? You can fit in a month's worth of comments in about 30 seconds. Go.
So as far as what we're talking about, if you're a broker, if you're a buyer, you're a seller, don't put yourself on the sidelines just because of the information that you're seeing on the news. A lot of the way that it's delivered to you, if you're reading just the headlines, it could look scary, it could look attractive. At the end of the day, if you need to buy a house and you can afford it, go out there, find something, get started, and start and move on. Don't be sidelined because of these things. There's always going to be reasons to scare you and reasons that are attractive. If it's time, just go ahead, jump in the water, and move on. You'll be fine.
Are we sure he wasn't a broker in another life?
I think he was.
That was very good.
I'm gonna start
All right, can you
charging
top that,
percentages.
Jared Antin?
I'm going to try. Let's see. You can vote after the show. I'm bullish and optimistic on New York City real estate. You know, we've had almost 10 years of just sideways price movement. And I think the most important thing is we're starting to see a formation now for this next upcycle. You know, we saw incredible boom years in 2012 to 2015. To me, I think we're sitting right at 2010 where we felt it, but we didn't see for about a year and a half, prices actually start to move. And some of the data is showing prices are starting to inch up year over year. So I think the wheels are starting to turn. And what I'm most optimistic about is the buyers that bought in the early days of COVID are sitting on equity in their homes for the first time. Many other sellers that have come to market aren't. So these people are going to be in prime position to be able to sell, make some money, trade up, and they're maybe coming to the expiration of their 5-in-1 ARM soon. So the lock-in effect won't be as real, and they'll need to make a move. So I'm seeing some more healthy.
It seems every time there's a bunch of ARMs coming due, 30-year rates go down.
Exactly.
It's almost like this magical, remember at the financial crisis, how are they ever going to refinance these loans? And it's like, guess what?
It's all engineered.
All right, so my final thought is this. Whether you're an agent, a buyer, a seller, an attorney, or an economist.
Extraordinaire.
What you do doesn't change. The market conditions are what they are, but the process is the same. Brokers working with buyers and sellers have to inform them, right? Buyers and sellers have to make informed long-term decisions based on their needs, their wants, and how comfortable they are. And if you have the information and the knowledge, and we have these professionals available, sorry, professional economists are hard to find, but lawyers and brokers are in no short supply. Get the information you need, find out, focus on the payment, don't be laser focused on the rate. We always used to brag about how little we pay for our house, now we brag about how low our rate is.
Yeah.
Make an informed decision, you'll feel comfortable with it, and realize that you didn't panic, you took advantage of an opportunity perhaps, and at the end of the day, you got something you really love, or you made the move you had to make. Well, that's it. I want to thank Shar for making his dramatic return in such a big fashion. Look how many people came out to
We
see
got quite
it.
the audience here.
And Jared Antin for filling Scott's hair chair, as we'll call it. And, if you have any comments, ctl@bhsusa.com.
Or drop a comment.
Drop a comment, only nice ones.
We've got
please.
0 comments. A lot of views, no comments.
No, people got a lot to say to us, but I just don't show you. Anyway, have a great week, and we look forward to crossing the line with you again next week.
Thank you.